Hi, everyone. Welcome to the Walk to Wealth podcast. If you're tuning in on YouTube, make sure to like and subscribe and hit that notification bell icon to make sure you never miss a beat. If you're listening on one of the podcast directories, make sure to leave a review so I can keep getting amazing guests like my good friend here. And for anyone that may not know, I have my good friend Gaetano. Gaetano, for anyone that may not know you, tell us your elevator pitch. Tell us a little bit about yourself.
Yeah, definitely. I'm in the mortgage business full time and a real estate investor in student housing in Fairfield, Connecticut. I grew up in Trumbull, Connecticut, went to Fairfield Prep, then Fordham University. Spent a year working in Manhattan. Was working in a bond trading job that I didn't really enjoy. Working 60 hours a week for someone else. I was chained to a corporate desk. It was a blast. I worked with some great people and enjoyed the experience, but I knew it wasn't for me long term. Ended up leaving, coming back to Connecticut, and joining a family mortgage business that my dad started. That was about a little over 2 years ago now. Around that time, I started buying investment properties as well. And we're looking to grow the mortgage business. We're hiring more salespeople, helping them get trained, how to sell, who to sell to, what to say when you're in meetings, how to generate business quality leads, and then also just growing the investment portfolio. Now at 14 units under contract for a 15th, do a little over $1 million in revenue a year, and just hammering down on that niche of or niche, however the hell you say it, of student housing.
That's amazing. And you got a lot going on right now. Why don't we start off by going a little bit into your walk to wealth? So you're very successful now, and you're on the rise, up and coming. But before all that success started happening, tell us a little bit more about the backstory before we get into the nuts and bolts of today's episode.
Yeah, sure. I mean, I grew up really lucky. I had a great mom who showed me, and I mean, a dad too, but my mom was vital in getting me, my brother, my sister educated and in front of a lot of opportunities and seeing different sides of the aisle is what I would say. Whether that was with people that were successful, or she used to be a nurse. So she worked at a methadone clinic. She owned a rooming house in Bridgeport. So I saw a couple different sides of life growing up. Communion came. I was 8 years old. I think I made like $2,500, and this was pre-crisis, so anybody could get a loan. I don't know who got it for me, but I remember my mom took that $2,500 and bought like a $40,000 condo in Bridgeport. She probably spotted me the other $2,500 for the down payment, but she showed me profit at a very young age, revenue, expenses. I had a tenant. His name was Kenny. Called him Crackhead Kenny. He didn't have many teeth. They were all yellow. His eyes were more yellow than his teeth. And that was quite the experience, but it got me started at a young age, understanding, revenue, expenses, what I had to pay, mortgage, taxes, insurance, if a water heater went out or if there was something wrong with the home, windows had to be replaced. So grew up in that kind of environment with my mom always talking business. And I, did lemonade stands growing up. I was umpire on a commission job, and then college I had a couple side businesses, and from there just got was always looking to find out how can I hustle to make a few dollars.
Yeah, definitely. That's hustle is something that is kind of a lost skill in today's day and age, especially with people our age, because you're also extremely young as well. Most people our age aren't doing what you or I are doing, especially what you're doing, because you have it going on such a large scale already. And so with that being said, I know you got your property, your first one, at least pretty early on. Let's get it right into how someone, let's say, that is interested in investing in real estate, how could they start, getting their first investment property and getting that, that snowball rolling?
Yeah, there's two ways I'd say that would be the best. The first is a more popular form that a lot of people probably know if they've watched Bigger Pockets. It's house hacking. So you would buy a home, let's say could be a single family, but more so it's 2 to 4 unit properties. You buy it with 3.5% down with an FHA loan. So if it's a $400,000 property, you're putting down about $14,000. Then you have closing costs as well. Let's say another $10,000 in this area of Connecticut. So you're out of pocket for about $25,000. You live in one unit, your mortgage payment might be about $2,500, and then you rent out the other unit. Let's say you could pick up $2,000 in income. Your net payment is only $500 a month. You have to live in that property for 1 year. After you move out, if you can rent the unit you're living in for $2,000 as well, you're now cash flowing $1,500 a month. And that's how you get started with your first one. You buy it, you move in, you cut your living expense, your net mortgage payment, and then you move out after a year and you go do it again. The other option is you buy any kind of home, single family, multifamily. If it's a single family, you could put 5% down, live in it for 1 year, and then go buy another single family next year, move into that and put 5% down. And you could do that on repeat until you hit 10 properties, although there's ways to get around that too, where you just buy a new primary residence, you move into the new home, and you rent out your old one. And that's a really easy way to just start picking up investment properties, trailing investment properties with 5% down each
That's
time.
definitely a super great idea. Now, Gaetano, if for all my OG listeners, they know that I already had a lender on here, actually a couple episodes back. And so what she was saying a little bit, and I want to get your opinion because not only are you an investor yourself, but you're also a lender as well. She was saying that people should wait and save a little bit more money so they can have a larger down payment and get rid of PMI sooner and lower the mortgage costs, because when you try to leave the first unit kind of, that you still have to have the income to qualify you to get another mortgage, because it's not like that mortgage is going to get paid off in 1 year and then you move out. You're still going to have to carry two mortgages. So how do people get around that?
In that case, if you're moving out of a primary residence and you're going to go buy another primary residence that you're going to move into, you can use the rental income, which you will receive, to help you qualify. So that $2,000 payment that you could rent your unit out for, if that's what the market rent is, you could get a 1004D, it's called, which is the appraiser will go out and say this is what market rent is on this property, and use 75% of that value to help you qualify towards buying your next home.
Okay. And so is that only with single family units? Is there a cap to how like the unit amount that people can use that for? Like what's the nitty gritty into how does that actually work?
So I don't know if this is going to answer your question, but when you're buying a property, let's say you buy a 3-unit property with an FHA loan, you're going to live in 1 unit and you're going to rent out the other 2 units. The other 2 units that you're not living in, that you're going to be renting out, you can use 75% of the gross income to help you qualify in your debt to income ratio for a loan. Additionally, if you bought this property already, you rent out 2 units and you live in 1, if you were to go buy a single family with a conventional loan, you're already getting rental income from 2 units. The unit that you're living in, we can use rental income from that unit, which you aren't receiving yet, but you will receive once you move out if you provide us with a lease and, let's say, a security deposit or first month rent to help you qualify for the new purchase of your single family home. So in all of these cases, you don't have to actually be renting out that property or those units at that point in time to qualify.
Oh, okay. And so with that being said, for the rental income, since you are using that, I know some banks require reserves. Is there some type of like amount of reserves that you have to keep per property or per roof or something like that people would have to save up for in order to use that gross income from the rents to qualify, or what's the deals there?
Correct. So when you buy multifamily properties, whether it's investment or owner occupied, you do need reserves. Depending on how many properties you own is how much you'll need in reserves. Could be anywhere from 3 months all the way up to X amount of months. There might not even be a cap on how many, depending on how many properties you own. And a reserve is considered 1 month mortgage payment. So 1 month of reserves would be 1 month of mortgage payments.
And so for you, because I know you have with your brothers, you got the Lantern Point Capital thing up and running. So how does that work when you have multiple people? Because a lot of people, want to get it with their boys or their friends, or they have a cousin or sister or whatever that they want to get into it with. How does that work? Because I know things get a little more complicated with now 2 people on the mortgage versus 1 person. So how does one go about trying to start something up with a partner?
So I actually get that question quite a bit from clients that want to buy investment properties with family or friends. And I tell them the best way when qualifying for the loan is if 1 person can qualify for the mortgage, get the loan in that person's name, let them qualify, buy it in their personal name, and then quick claim it to an LLC after closing, where all parties are members of that LLC. And there's an operating agreement that was drafted by an attorney that outlines the agreement, the rules of that LLC. You don't want to buy, in my opinion, investment properties with multiple people on the loan if you don't need them all to qualify for the loan. So if you're buying with 3 people total, it doesn't make sense to put all 3 on the mortgage unless you need all 3 to qualify for the loan. You're better off just doing it in one person's name so the other 2 aren't liable. It's not factored in their debt to income ratio. And if you go buy more investment properties down the road, you won't need, they'll be freed up to go buy and won't have that mortgage affecting their debt to income ratio.
And so let's say in a situation where, they're still not making too much money yet, they're either graduating school or around this age, and they still don't have something that's too secure. So they need either both or 3, however many people in that party to go on a loan. What would be your advice then if they need the multiple people to qualify for the mortgage?
So let's say somebody just finished up high school or college. If they've graduated recently and they have a salaried job, they could buy a home without having a year of work experience if they're on salary. If they have 1 month of work experience and they could provide us with a diploma, we can use the salary to help them qualify. If they just graduated and they're an hourly income earner, so they're getting paid hourly, with 12-month history, we can allow them to use that variable income to qualify. So let's say they don't have either of those. In that case, then you might need to add 2 people or 3 people to a loan and see if by adding more people, will their debt to income ratio improve to help them qualify. If none of that works, because they don't have any income, but they have money for the down payments, then you're going to have to look at a commercial loan or a debt service coverage ratio loan, which is a non-QM loan. That will look strictly at the market rent of for a non-QM DSCR loan, looks at the market rent of the property, what it's going to generate. As long as it's greater than the mortgage payment, you'd qualify if you have a down payment and a credit score above X amount. For a commercial loan, same thing.
What's the difference between, for anyone that may not know, the DSCR loans and the, more conventional loans? Yeah. Why would one prefer one or the other for someone that doesn't know the difference between the two?
If you could qualify for one of the two, you'll want to qualify for a conventional loan. They're government-backed loans, so Fannie Mae and Freddie Mac will purchase these loans, securitize them, and sell them. They offer better interest rates and less closing costs. Non-QM loans are private labels they're private loans that the government's not involved with and doesn't subsidize them. So they're going to have a higher interest rate and more closing costs, but they're easier to qualify
and so to take it back a little bit, back to you saying the quitclaim deed and all that stuff. For anyone that may not know, so how does that work, that process? So they got a loan. Let's say I got me and my buddy, and we just bought a property in my name because my income qualifies. I'm on the mortgage. Then I want to quitclaim it. Explain that process for anyone so that they know how step by step how to go about it.
So the easiest way is you don't have to actually do it. Your attorney will help you. But when you buy a property, you take title. If you're buying it in your personal name and you're getting a loan, a conventional loan, you're taking title and your name is John Mendez. You could quitclaim it after you purchase it into an LLC, meaning transfer ownership from John Mendez as a sole person to a business or LLC. Now that LLC will then be owned by whoever you decide, and that'll be the new owner of the property.
And then, so what I've heard too as well is that in certain situations when you try to quitclaim deed it, then the bank is technically, if they wanted to, they would be able to ask for the rest of the mortgage to be paid upfront once you quitclaim deed it into an LLC. So how does that work? Do banks actually, call for the money when you quitclaim deed it? How does that work?
So I believe that'd be an acceleration clause, and that's honestly a question for an attorney, and you have to review your loan docs before you were to move forward with that. I've personally quitclaimed it to an LLC and haven't had an issue, but you have to talk to your attorney before you make that decision.
And what kind of questions do you ask with your attorney when you get this stuff situated so that you go about it the right way?
Nowadays, once it's you've done it a few times, it's pretty streamlined. And especially if we're getting the same kind of loan products, we've done a few conventional, a few commercial. When you're working with different banks or credit unions, you have to be a little bit more you ask more questions because it's not standardized like a conventional loan. Regarding prepayment penalties are going to be different. They're going to have certain loan covenants as well, meaning they might want to see tax returns every year, which a conventional loan does not ask for. But in regards to questions for an attorney, nothing really changes once you set up the LLC. You get the operating agreement in place. And for a conventional loan, once you do it once, it's pretty much the same anytime you
Okay.
get a
And for
conventional
the
loan in the
operating
future.
agreement, what does that typically consist of for someone that's trying to set this up right now? What are some like key points that, like, you don't have to go over the whole thing? Obviously, you're not an attorney. Nor are we giving any legal or tax advice here. But what kind of things do you want to make sure to go over?
Yeah. So this is the bylaws of the partnership. So you want to first verbally talk through with your partners what the breakdown of ownership is going to be and what work is going to be required from each person. The operating agreement will break that down in writing and be signed by all the parties. It'll also say, God forbid this were to blow up, here's what would happen. If you have 3 partners, it'll also say, we need a 2/3 majority to make X decisions, or we need 100% or a majority, unanimous authority. So anything that you want to discuss with your partners that you talk about will be in the operating agreement. It's just a
Okay.
legal security
And then,
document.
so now that we got a little bit of the strategy behind how to get it, how can we go into a little bit more into why student housing? Why that ended up being your niche, or niche, or however you would pronounce it, right? How did you end up in student housing?
Yeah. So student housing, actually, my mom bought a student housing rental 4 years ago, saw how profitable it was, and I said, wow, this is something I need to get into. And 2 years ago, opportunity was on the market, and I was looking to buy at that point, so I took a stab at it. Why I like student housing is usually it's higher rental income than market rate housing. So students will pay more than a regular family looking to live in a house. Vacancy is usually lower in student housing versus market rate housing. Family might move out, you have to turn the property over maybe for a month or two and then rent it out. Student housing, ideally you have it leased out for each school year and you have students lined up by the time the next group is going to move in. So vacancy is very low. And then if you have parents guarantee the leases, you don't have to. You could though. It sometimes causes more headaches than not. But by having co-signers on the lease, the rent is almost 100% guaranteed, and bad debt is close to
Okay.
0%. So for those reasons, I mean, all of those have, meaning low vacancy, you rarely never not get paid, and then higher rental income
Okay, and
are
so
great
for
reasons
anyone
for
that's
student housing.
getting started, what are some of the biggest lessons that you learned that you would have avoided had you gone back and tried to do things differently in the most efficient or productive way?
So few things with student housing that I look at just top of mind. The first is whenever you're going in to look at a house, look at the dining room. Students don't need a dining room. So you could convert the dining room into a bedroom, turn the living room into an open floor plan with the kitchen. Or you turn the living room into a bedroom, you open up the dining room and the kitchen and make the dining room a living room. By creating another bedroom, you can rent to another student as long as it's within the town guidelines of maximum unrelated amount of people living together, and you'll be able to generate more income. To put up a couple walls and create another bedroom might cost you $1,000 to $1,500, and you could probably make that back
Mhm.
within a month of renting it out to
And so,
students,
what are
1 to 2
something?
months.
Mhm. No, I was gonna ask.
So you'll
So,
get,
what are some things
yep.
that you look for when you walking through these properties, and you're on Zillow, or or on the MLS looking for houses? What are some things you're looking at?
So the most important thing is location. You want to be either close to school, close to the downtown, close to the bars, or if there's, if it's a larger state school, say closer to stadiums where large football games, let's say, are going to be. You want to look at the size of the bedrooms. Super important because students spend a lot of time in their bedrooms. Small bedrooms are not going to be something that students want to live in. The backyard of the house is also very important because students would like to ideally hang out. And if they don't have a yard, it's definitely tougher. It's a tougher sell when renting it. The amount of parking is super important. You don't want students having to park on the street or on the grass. So Can you have a large enough driveway? And then location in regards to who are the neighbors. You don't want to buy a home, turn it into a student rental, surrounded by all residential neighbors. It'll actually be a nightmare. You'll be dealing with phone calls all the time, problems. So ideally, if you're buying your other student
Yeah.
housing,
And just
rentals
from
would be
at
ideal.
least what it sounds like, because knowing, and not to generalize, but as you know, college people like to party a lot. So, like, how's your issue, if you had any issues, been with, managing, some of the college students and ensuring that your property still stays in good condition despite all the parties and stuff like that that usually tends to go on during college.
So that's a really good question. We require renters insurance for the students for their own personal items. In regards to like the house, let's say getting destroyed because people are having parties, up front we let them know that hopefully this isn't going to be a huge party house. If it is, we're collecting a security deposit. If there's anything wrong with the home, we will keep some of the security deposit to pay for any damages, and we'll provide them with a line item breakdown after they move out with what those damages are. But from a standpoint of me being there every weekend to make sure there's no parties, it's just not going to happen.
Yeah.
So if they want to have the parties, they could have them. You just hope that they're not going to, create
Okay, and
damage
so
to the
what
property.
does your screening process look like? Because when you're typically, I guess interviewing, or if you interview them, how does that look like when you're trying to find a property? Because you said, with vacancies, it tends to be a lot lower because you have people lined up. So what does that look like?
So honestly, with us, we're trying to rent the properties at the highest price as quickly as possible for the least amount of headache. So our screening process with students, uh, we're at a school where there's no fraternities. So we don't have fraternity housing. There are, let's say, sports team housing that gets passed down. So if you have one of those homes, that's a great benefit. But it's mostly groups reaching out to us. We're asking a few questions to them to get an idea of what kind of housing is going to suit them. And then we're showing them what's in their price range
Okay.
and what
And
they're
so
looking for.
when picking a college, or did you have like a strategy as to by which school you're going to buy the properties in, or did you buy schools local to just the area you happen to be in, and it just so happens that you have a college in that area? And how much thought went into picking which college that you're going to do student housing for?
So there's a couple colleges locally here in Fairfield. You have Fairfield University, Sacred Heart. If you go out a little bit further, you could extend to Central Connecticut, Western. In New Haven, you have Yale, Southern, University of New Haven. And honestly, for us, it was buying something that was local. So that means Sacred Heart or Fairfield U. We started at Fairfield U, and actually everything right now is at Fairfield University. We are going to be looking at other schools eventually. When you keep buying and buying, there might be better opportunities elsewhere, and hopefully we could package up the model that we've done at Fairfield and bring that to other schools. But it started because you were able to find one house that makes sense. It was a good investment property at the time. It performed well. We found other opportunities in that market, and we bought those as well. And as long as that continues, we'll continue to buy in Fairfield. And as opportunities start to come less and less, we'll then look at other
Okay, and
schools so that we could buy there as well. And that doesn't even have to be in
okay.
Connecticut. That could be
And
in
when
any
you go
state.
to any state, would that same process in terms of how you guys acquire property be the same, just you're changing the location?
For the most part, yes. There is a very big benefit, though, of buying in a market where you become well known. Because when a deal comes up, maybe a broker is going to call you first, or an owner is going to think of you because you've been able to build a relationship over the last 3 to 5 years that compounds over time. So going to a new market is definitely going to be tougher with finding new opportunities. It's not impossible, but if I went to, let's say, University of Tennessee in Knoxville, there's people that have been buying there for the last 15 years who are well known, and it'd be very tough for me to break into that market versus somebody who's been doing, the first
Mhm.
mover's advantage, who's been
So, was
doing
there
it for
anyone
15
already
years.
established in Fairfield, and at least for in terms of like in the student housing department, or were you, was it thrown for the taking, and you just happened to see the opportunity and ran with it?
I don't know of anyone. I'd like to think I'm getting there. I'm not. I might not be there yet, but I
Yeah.
think Lantern Point is going to be there soon. Um, we're looking to buy. We're actively looking to buy more deals. We're under contract on one right now, and I'm door knocking, I'm calling, I'm sending mailers, anything to try and generate more opportunities. But I don't think there was anybody at any specific
Okay,
time,
and
but
then
we're working
just to
on it.
pivot a little bit, so how are you finding these tenants that are occupying your properties? Do you have like some type of contract or anything with the school, or are you just reaching out to, setting up like a Facebook ad to look for people trying to move into the area? How are you actually finding these tenants, or are they finding you? Like you listed on Zillow when they happen to inquire about your property. How does that go about?
So that is probably our bread and butter. And that's what's allowed us to buy 15 units in the last 2-ish years. So I don't want to dive too deep into giving away the secret sauce, but generating
Okay, yeah,
student interest
definitely.
is very important.
And can you give, one step for anyone, at least a start? It doesn't have to be of the secret sauce, but if someone wants to generate some student interest, what are some ideas they could go
Yeah,
without giving out too much of your, the sauce?
walk on campus and ask students where they
And
want
does
to
the
buy
campus
or where they
usually have
want to
any
live.
issue with that, or can they tell the difference?
Um,
Yeah.
you might have to go to a department on campus, but I mean, if you walk onto a university campus and just start talking to
Yeah, definitely
students,
makes sense.
that's not
Makes
a bad
sense.
idea
And
either.
so, how have you been managing so far with, the Lantern Point Capital, and you kind of also taking the lead, or you're leading the charge with your father's mortgage business. How have you been able to, you know, manage doing both of those at, this age?
Two things. I'd say the first thing is spent money on getting coached by somebody that's better than me, that's helped with the mortgage business and sales process. I spend a good amount of money on building or learning marketing and video content from other people. Also on how to be a better lender and salesperson from people in the business who've been doing it a lot longer than me, and who've done it at a lot greater level than anyone that I know personally that aren't even located in my market. So spending money on coaching has been a huge benefit. The second thing has been time blocking, time management, scheduling out my calendar. If you were to look at it right now, it's, pretty much this week. I know everything I'm doing at every point, and that's been super helpful with being able to knock out a lot of tasks in one day, because I can look at my calendar and say, I know I'm doing exactly this, and part of it's for AFC, part of it's for Lantern Point, and then I'm able to knock out a lot more than when I previously would just come in on a Monday and be
Yeah,
like, all right, what's going to be going on today?
definitely.
So
And so, for
I'm
anyone
more
that's a little
proactive,
hesitant
and
to
that's
get into
helped a
coaching,
ton.
what would you tell them?
It's the best investment you can make. You just have to make sure that you're finding somebody who's actually doing the work that you want to be coached on. So in my business for mortgage lending, I want to make sure I'm being coached by somebody who's being a salesperson in a lender today. I don't want somebody who retired 5 years ago, 10 years ago, and is going to coach me on how to do it, because things have changed. I want somebody who's in the weeds doing the exact same thing at a very high level. I'd be happy to pay a lot of money for that opportunity to learn from somebody like that, because the mistakes that they've already made, they're going to share with me so I don't make the same ones. And things that they're doing that are working today, they'll also share as well. So you could either learn with time or money. I'd rather learn with paying
That's
money
a
so
good.
I save time, and that's been super helpful.
That's a
But I
very,
highly
very good quote.
recommend
I haven't heard anyone
anyone
say
to do
that.
coaching.
So you can learn with time or money, or you rather use money, right? So you could save time. That's a good one. I'm definitely gonna remember that. And so, for anyone that wants to
Yeah.
get into time blocking more efficiently and productively, what are some tips you have in that department?
So for me, my week actually starts Sunday night around 6, 7 p.m. I'll take a look at my schedule. I'll plan out my Monday and the rest of the week. I've already probably have most of my appointments booked for the week at that point, but I'll make sure that if I have to fill anything in, I will. I'll make sure that any outbound prospecting I have to do in the mornings, I have blocked out. And then if I have any white space, I figure out what it is that I could do in that, even if it's just nothing at all, but time to think about new idea generation for making some money in the real estate, in the investment business or the mortgage business. So It all
That's
starts with
amazing. And
Sunday
so
night
I know
setting
you
my
wanted
week
to
up.
touch on a little bit about like, the sales process, and we're kind of on the topic now. So, how did you get so good at sales so early on, so quickly? What helped you, aside from the coach, obviously, but like to get, good at sales?
Yeah. I I might be decent. I'm not great. I have a long ways to go. I know guys, my coach is 10 times better than me, and I know there's people probably 10 times better than him. Uh, honestly, it's persistence. Persistence wears down resistance, is what I say here. When you first make a cold outreach, trust is low, barrier is very high. As you continue to provide value, you continue to follow up with that person and continue to call them. Eventually, you're going to wear down that barrier, and the trust is going to get higher and higher. And if you keep calling long enough, like if you were to look at my phone call and some of the prospecting I've done, you'd be like, holy shit, this kid doesn't stop. I've called people for the last year every 2 weeks, and it's just one side of the conversation with no response. But eventually, with a
Yeah.
long enough time horizon, you'll eventually connect with that person. And I think that's what's important. So the biggest thing I think with sales is you don't have to be the smartest person. I'm definitely not. You just have to be persistent. And I think hustle is a really good
Yeah.
word
And
to,
so
to
why would you
define
think that
sales.
sales is such an important and necessary skill to have, especially in the time and day that we're in right now? Why is sales so important? Why would someone want to get into sales?
So you're always selling. You're selling yourself in any aspect of life. And I think that it's the highest return on investment you can make. If you could sell anything. The product doesn't matter. It's all about building relationships, providing value. Um, so I think if you could be in sales, whether it's an actual job or even if you're finding like a life partner, anything
Yeah,
sales.
definitely. And
So it's
how do you
important
get
to
it
learn
wrapped
early
around?
on.
Because a lot of people my age, not even just our age, but like in general, have like a negative stigma behind sales. They hear the word sales, they cringe, they tend to put a wall up, they tend to get very defensive. So how do you, change that mindset around sales? How do you get people to change the frame of what you think about sales?
So I think you hear this a lot about like the slimy salesperson. I think by not expecting the customer to buy and constantly providing value, you could kind of turn
Yeah.
that around. I think that's the most important thing. As long as you're not looking to make a sale and you're just here to provide value, you'll
Yeah,
be
there's
successful and
a quote that
that
I actually seen
stigma
on
won't follow
Instagram
you.
not too long ago. It says something along the lines of sales is getting someone to make a decision right now, yes or no, without pressuring them to say yes. It just giving them this information, the value, whatever that they need
Hmm.
necessary to make a decision. The decision can be no, it could be yes, it could be maybe, but getting them to make a firm decision and providing enough necessary information for them to actually be able to confidently make that decision, whatever that decision happens to be. So that's a good quote that I've seen. I also wanted to talk about too. So I know you guys are looking to hire people to get into the mortgage industry. A lot of people our age are still trying to find their walk. They're still trying to, find out what they want to do. Why would someone get into the mortgage industry, especially at this age? It's because, as you know, real estate, mortgages, all that stuff that's real estate related tends to be an industry dominated by people much, much, much older than we are.
I think a couple things around this. I always say, if you're looking to make a ton of money in this business right away, you're in the wrong business. You're not going to come out of the gates making, three, four, $500,000. Guys are making a million plus. It's not going to happen. But if you have a long enough time horizon, 10, 15, 20, 25 years, and you are willing to come in, put the work, prospect, make outbound phone calls, cold calls, provide value, follow up with people, you could do very well. It's a great business that doesn't have a ceiling. And, to live a really good life, $500,000 would probably provide for a great life, and you can easily hit that in this business. Um, and I think that it's the time freedom too. You're in a sales position. If you want to take an afternoon off to go spend it with your family, you can. You could build out a team to help you go, so you could do that as well. So from a perspective of income is not capped and you have time freedom, I think that's the best reason to join a business like this. On top of being able to help family, friends, with probably the largest purchase of their life, but also helping them build a net worth and equity, because a home is somebody's most valuable asset
Mm-hmm.
by the time they get to 65, 70 years old. So you're doing all of those things, and it's a great way to help others while also
And so,
benefiting and
how are you
making
able
a
to
good
make
earning
the
and income.
decision to, as you said, you're not gonna, in most cases, you're not coming out the gate swinging, right? So, how did you know that despite that, in a world
Yeah.
where instant gratification is pretty much, glorified, what made you, I'm assuming the time freedom, obviously, but like, how were you able to confidently make that decision?
The biggest thing was I was lucky in a sense that I didn't have any. I was able to cut my living expenses as little as possible when I started a full commission role. So I actually moved back home with my parents. Luckily, wasn't being charged rent, and I didn't have many living expenses at all. I came into work, put the work in. Any money I made, I saved, and that's how I was able to get started by cutting down all of my living expenses so that I didn't have to. I know guys that started in the business that had living expenses, but they worked a second job while they were doing this. They were working as a waiter, a bartender to supplement the income that they weren't making right off the bat. And then as they got their business going, they left the restaurant business. So those, I think, are the two best ways. My way was luck and being fortunate, but the other way is a great way
Okay. And so, as
to
you
be
start
able to
wrapping
kind
up
of get
here,
around that.
what do you have up and coming? What do you have in the plans? What are you working on currently, right now? What's in the plan? What's in stores for the future?
What do we have? We're doubling down on video content creation. Just hired a videographer full time. He's a great guy. Does awesome work. We're looking to build our social media brand. If you look us up on Instagram, myself, some of the guys on the team, you'll see a lot of content. We're looking to double down on that. We're looking to hire other sales guys as well that we could help build their brand, teach them how to sell, who to sell to, what to say, how to conduct a sales meeting. And then that's on the mortgage side. The investment side, continue to find opportunities for student housing in Fairfield, Connecticut.
Yeah, okay.
And then eventually
And where
package
is
that
the
up and
best
go
way
look at other
for
schools.
people to reach out to you? I'm gonna have your links and everything in the show notes. But where do you want people to be? The main way to contact you. What's the best way? Okay, easy.
Best way is
Nice
probably
and
going to be
easy.
an Instagram message.
All right, perfect.
Yeah,
And now,
Gaetano
as we finish
Ciambriello,
wrapping up, we have our
easiest
final
way.
4 questions. So I'm going to ask you these questions to make you think a little bit on your toes.
Yep.
First one being, what is the most impactful lesson that you learned in life?
Oh, there we go. The most impactful lesson that I learned. Burn a bridge is good, and it kind of plays into be respectful to everyone that you meet. Meaning not burn any bridges because you never know when you're going to have to run into them again. And I've had that happen where I've definitely burned a bridge and then realized really quick that was a mistake. You got to be careful because not only will you might run into that person again, but the ripple effect.
Okay, so never burn any bridges.
Who that person
what
knows,
is the
you
most
never know.
admirable trait a person can have?
The most admirable trait a person can have, I would say, is being it's either being loyal or being honest. And I think it's honesty. I think honesty is tough to come by these days.
If you wanted to change someone's life with one book, what would you recommend?
Change someone's life. So it's a different answer than my favorite book. Change someone's life. I'd say Rich Dad, Poor Dad.
For one of our
Changes
episodes.
your way of thinking.
That's the one that changed my way of thinking. As I said, it's not my favorite book either. It is a great book, but it wasn't great compared to other great books. But it did shift my mindset enough to make me realize that there was an entirely different way of viewing the world out there, and I just had to go and search for that information. And so the very last question before we wrap this up is,
100%.
what is the legacy that you're trying to leave behind in a couple sentences?
I'm trying to help friends, family make money.
Amazing.
If I could help them do that,
Gaetano,
everything else will work out.
It was a pleasure having you on the show. I'm super, super excited to have this go live. And, I'm 100% sure that my audience will definitely be able to take a lot away from this episode. So it was a pleasure having you on.